Hello, everyone, and welcome to our webinar on creating the gateway and accelerating access to Asia. This will be presented by TNS and SGX. The following speakers will be presenting today. Craig Cohen, Senior Vice President, Head of North American Sales, SGX. Paul Machione, Director, Global Sales and Origination, SGX. Jeff Mesger, Vice President, Product Management, TNS. Scott Fegans, Vice President, Technology and Strategy for TNS. Q&A will be taken at the end. However, please feel free to drop any questions into the question box as we go along, and we'll answer them towards the end. Thank you. And I will now hand it over to Craig.
Thank you very much. Singapore today stands as the Asian hub for international business and wealth management. We are amongst the most international exchanges in the world, with over 40% of our listed companies coming from outside of Singapore. Our Pan-Asian multi-asset derivatives and fixed income exchange has the world's most liquid benchmarking of China, India, Japan, and the rest of Asia. Our commodities complex is the leading exchange for both iron ore and rubber, which has become quite relevant during this recent commodity cycle. Let's go to the next slide. As noted previously, we have an extensive suite of products that cater to investors looking for Asian exposure. Our most liquid markets are China, Taiwan, Singapore, India, and Japan, but we have a full suite of single country net total return exposure in markets from Vietnam to Malaysia and many more across the region. Our commodity suite, which Paul will highlight in a moment, consists of affirmation rubber and iron ore to the growing freight complex. And our growing FX futures pairs continues to rise monthly, with CNH and INR our most popular pairs. Moving on to the next slide, I want to highlight 4 of our major contracts. The A50 contract. The SGX FTSE China A50 Index Future contract remains the most liquid international benchmark for China, with about 8 billion daily average volume and 13 billion open interest. It is a highly tradable and liquid future on mainland China A shares, with global acceptance since its launch in 2006. It was the pioneering offshore Chinese equity futures contract and remains to this day. Worth noting, volume grew 20% year over year in September, and we had 1.8 billion during the recent Golden Week in China from October 1st to October 7th. The contract is CFTC approved and offers a tight bid-offer spread of 1 BIP across all time zones. Can we please go back one slide? Our Nikkei product is one of our oldest contracts. SPX is the primary offshore Nikkei futures market across Asia, Europe, and the US sessions. Average daily volumes 8 billion and 18 billion of open interest. We are proud to have the most comprehensive future suite containing the Nikkei 225 futures and options, the total return, and the traded index closed futures. Again, this is CFTC approved, but settles in yen. Our FTSE Taiwan future was one of the most successful product launches of the past few years in any global market, and further demonstrated our leadership in the Asian derivatives franchise by working actively with our market participants to successfully execute the world's first liquidity switch. We are proud to now have 90% of the volume and 80% of the market share of the offshore market. Again, this product is CFTC approved and USD denominated, and boasts average daily volume of 5 billion and 6 billion in open interest. It's worth noting that 90% of this volume is traded on screen with a one tick wide bid offer spread. Our last contract worth highlighting is our Nifty contract. This is our most liquid offshore future. This is the most liquid offshore future managing managing Indian linked assets. It's CFTC approved and USD denominated, with ADV of 3 billion and open interest of 5 billion and a bid offer spread of just over 1 BIP. We are working with NSE towards operationalizing the NSE IFCSC SGX Connect, which will bring together international and Gift City participants to create a bigger liquidity pool in the upcoming year for our Nifty product. With that, I will hand it over to Paul to highlight both our commodity and FX suites.
Thanks, Craig. On the next few slides, I'd like to take a moment to talk about SGX FX and commodity offering. SGX is the fastest growing FX futures exchange, holding 11.4 billion USD notional of open interest in FX futures as of July 2021. The compounded annual growth rate of volume in our FX complex is 119% from November of 2013 till July of 2021. It is SGX's ambition to build an integrated and scalable FX platform that will become Asia's largest one-stop venue for international FX futures and OTC participants. While the focus of this webinar is on our derivatives products, SGX has made a series of investments in the OTC space, such as BidFX and MaxTrader, EMS/OMS platforms in the OTC space. Our next step is to offer clients a full suite of FX futures and OTC solutions by setting up an FX ECN to offer low latency access and price discovery anchored in Singapore. On the next slide is the complete list of FX futures offered on SGX. Across the complex, we offer standard futures, mini futures, options on futures, and flexi contracts, which I will touch on in a moment. Our fastest growing FX pairs continue to be the USD CNH and INR USD futures, as market participants look to listed derivatives to manage their currency risk. As of September, daily average turnover in the USD CNH contract was 4.41 billion USD and held an 84% market share in volume. In INR USD, average daily turnover was 1.67 billion USD with a market share of 77%. With both pairs, market participants can find deep order books, tight bid offer spreads, and liquid calendar rolls through T and T+1 sessions. Our pairs that are still nascent but growing nicely include our KRW USD, TWD USD, and USD Sing Dollar. Before moving on to the next slide, I would like to briefly highlight SGX Flexi Complex. In Jan 2019, SGX launched Flexi to give market participants the ability to trade customizable FX futures in an OTC manner and clear them through our clearinghouse. Through this innovative product, clients can enjoy the benefits of capital efficiency and transparency of a standard exchange traded futures contract, as well as the benefits of flexible maturity date of an OTC contract. On the next slide, I would like to pivot to talking about SGX commodities futures offering anchored by bulk products. On the screen, you will see a quick overview of the growth in the complex since 2009. SGX continues to lead in the seaborne market share, with iron ore derivatives accounting for 95% of the volume, coking coal at 100%, and dry bulk freight at approximately 60%. COVID-related stimulus has driven strong interest in commodities, especially in SGX steel value chain, resulting in heightened volumes across iron ore, coal, FFAs, and even rubber and petchems. The next two slides bring into focus iron ore and the global importance the contract has garnered. What once was a hedging tool for physical iron ore traders has become a macro proxy to the economic development in China and used more widely by global asset allocators. Iron ore is a key ingredient for steelmaking, and its price is a useful indicator for global economic activity, especially in China. SGX iron ore pricing can provide real-time measures and insights into the Chinese macro economy. Globally, the iron ore market is the second largest commodity after crude oil, and in terms of annual return, the best performing commodity over the past 4 years. The financialization of SGX iron ore futures has led to robust growth of trading on the screen, which now accounts for approximately 25% of all daily volume. With that, happy to take questions at the end of the session, and I'll turn it back to the TNS team.
All right, thanks, Paul. So now let's talk about what TNS has been doing throughout Asia Pacific and in Singapore specifically. So TNS spent the better part of 2020 and early 2021 expanding our low latency service portfolio across the entire Asia Pacific region. And this was driven by a number of factors, but we were primarily driven by our clients. And we see this increasing trends towards particularly US and European firms wanting to access and trade Asia, but not only access, but we have their infrastructure located at the exchanges and deploy these low latency trading strategies. It's being driven by a number of factors. It's just in the securities market as the economies continue to grow and develop in Asia, or as particularly as we see more companies listing in Asia as opposed to the US or Europe. We just see firms that have increased desire to have exposure to the Asian equities markets. But also, as Paul touched on, when Asia, the use of commodities is growing, and you're increasingly seeing the commodities traded in Asia start to emerge as benchmarks for the global economy. And you just see these trends where people are increasingly wanting to access and gain exposure to Asia. So for that reason, we expanded our low latency product portfolio across the region. And Singapore was clearly a key component of that for a number of reasons. Singapore is one of the world's major financial exchanges. SGX, for the reasons Craig and Paul just talked about, is one of the world's major both equities and derivatives exchanges. But it's also just an easy place to do business, both the exchange and in Singapore itself. And they've been great partners as we've been building the solution out. So we can go to the next slide. We'll talk about what we have built out in Singapore. So we have brought our entire infrastructure as a service portfolio to bear in Singapore in SGX colocation. We've taken space in the tier 1 colocation suite at SGX, so that allows us to offer the lowest latencies to the matching engine. In addition to that, with our managed hosting portfolio, we offer our layer 1 services, which Scott will talk about a little more in a minute, further minimizing that added latency between the matching engine and your trading infrastructure. Beyond just the managed hosting, we offer market data and order routing access locally within colocation through 10 gig connections for the market data, again, ensuring the lowest possible added latency. Offer ETP time synchronization, WAN, internet access, but also we offer access to TNS's extranet services. So through the extranet, you can access 2,000 endpoints representing the full suite of not only global banks and vendors, but also local and regional brokers that can help facilitate access to SGX. And it's not just about what we've built in the data center. We also have knitted all of our new sites in Asia Pac, but particularly SGX, into the TNS global. So we have expanded our backbone throughout Asia. SGX now connects to 17 sites locally in Asia Pacific, but also a further 39 globally. And this access was engineered, again, for the lowest latency, using the lowest latency available commercial fiber links. It's fully resilient with multiple paths in and out of each city and multiple subsea cable systems to ensure uptime and resiliency. And it's also high capacity. So one of the things we are able to do is bring in that away market data from the US and Europe into the sites in Asia Pacific and in SGX in particular. So with that, I'll hand it over to Scott, who will talk a little bit more about our layer 1 offering.
Great, thanks, Jeff, appreciate that. All right, let's go to the first slide there, Terry. Okay. So, look, the title of this, webinar, it kind of plays right in, part of that is, accelerating access to Asia Pacific. And really it's, fitting to discuss, our ultra low latency product offering, as Jeff touched on. It's with layer 1 at its heart. For those not familiar with layer 1, it's an FPGA-based switch technology. HFTs have been using this, for several years, giving them, significant advantage over, traditional layer 3 type networks. And, so we wanted to harness that same technology and provide it to our customers globally. And because, TNS has deployed layer 1 all of its major colos, we too have the ability to give our clients that same significant type advantage that other managed providers, who traditionally use a layer 3 network. Now, I'll go into some of the benefits around the product in a second, but let's go over a bit of a history and how this came about. Back in 2016, NetExpress, they developed the first ever shared layer 1 product offering through really a co-developed project with Atomico. It's now owned by Arista. And then after about a year and a half of development and extensive testing in 2017, we were able to bring this into full production. And so, so we've been operating that way for quite some time. Now, fast forward to 2019, TNS acquired that technology as part of a purchase from NetExpress, where TNS continued to deploy that layer 1 architecture at every major exchange globally, including our new Asia Pac, our build out, making it really the first and only provider to have this technology deployed globally. But anyway, let's see how this actually does compare in a traditional layer 3 network, and go over some of the main latency advantages that come from really 3 architectural design components. The first one I want to touch on is first and foremost, because layer 1 does utilize FPGA that runs in a minimalistic code that's been highly optimized for trading. It really gives those layer 1 customers a 10x advantage over traditional layer 3, and we see latencies as low as 5 to 85 nanoseconds for that latency profile. The second component that makes has a latency advantage is the single hop architecture. You can see in the diagram at the top, we have the exchange. The second picture below it is our layer 1 switch, and the clients directly below that connect. And so it's a very flat network. It's a single hop into the exchange, and it doesn't take a rocket scientist to know that less hops equals less latency. And then the final point that allows us to give a client a latency profile as low as they do in our environment is we have a unique, what we call the ULL cabinet design, and what we did there is we built out the shortest possible 1 meter cable lengths and harmonized that traffic for clients to give them the best performance and consistency for the hosted environment. So we think those 3 main components are what really set us apart from a lot of the other providers out there. But there are other advantages, to the layer 1 architecture besides latency, and one being that we're able to provide higher levels of resiliency. We talked about the 1 hop into the exchange. That single hop, creates less points of failure. So, so you can see that we have a lot of not just consistency, but that resiliency is also enjoyed by the customers hosted there. Now, the last point that's a benefit to this is less hops also mean that means that our infrastructure has a lower operating cost. It has a lower, overall cost in general, and that allows us then to provide this, premium service at a competitive price. So, so those are the main benefits that we see in our layer 1 versus, a traditional environment. Now, in this slide that we have up, I do want to discuss that we do have, more of a traditional, layer 3 for those customers that, truly do, may not need the lowest latency for some of their applications, back office, data collection, running tests and other things. They can mix and match. They can put stuff in layer 1, put some stuff in layer 3, but it gives you that connectivity option that's more traditional that clients are used to, in addition to the layer 1. And so we've got this capability at the heart, and we harness and build off of that specifically for those customers to do that. Now, in the conventional layer 3, I know we just kind of contrasted that with our competitors. Well, in our traditional layer 3 environment, and the conventional setup here is, we directly connect those to the layer 1 switches, and that also cuts out another layer 3 hop. So we talked about some of the latency improvements that are there. Even in our traditional layer 3, we're still 2 to 3 times faster than most competitors out there in a traditional layer 3 environment. So, and we can answer more questions if you have anything that you want to ask at the end of the panel here. So this slide here shows, similar to what Jeff was showing, is that we have a WAN backbone that connects globally. But I want to show here is that we actually do have layer 1 deployed globally at multiple sites around the world. And we have a solid presence, in all 3 regions, North America, APAC, EMEA locations. And that gives our clients that the assurance that if they want to trade in this market or they want to trade another market, we have the exact same architecture built out at all of those sites as well. So that gives us the ability to interconnect those sites too. For you might have some trading strategies, you may have away markets, you may just have WAN connectivity between each other. As Jeff mentioned, we do have the lowest possible latency profiles between each of those sites, and we're also able to bring in connectivity from an away market or such, or give you access to our 60+ exchanges that we have around the globe. So All right, go on to the next. I'll turn it over to Jeff.
Yeah, so you can go ahead and move on to it. So, when I talk to customers that are interested in access in Asia, the first thing that comes up is, well, it's real hard to do business there, or it's hard for me to access it. And we wanted to take a second to just kind of disabuse you of that notion. And I think a lot of that stems from people in firms that might have tried to do it themselves in the past, because there are some legitimate challenges if you're doing it on your own to accessing and doing business in Asia. But that's where a service like TNS comes in, and we can take a lot of challenges off your plate, and we have solutions for most of them. And the common issues that pop up are obviously time zone or language barriers, less so in Singapore, but certainly the time zone is an issue. Time to market concerns, opportunities are fleeting, and how long is it going to take me to build out and stand up this infrastructure? Well, I missed the opportunity. Difficulty finding local brokers to work with. Challenges in securing hardware locally, just identifying, working with vendors locally. Understanding the different exchange technologies and rules of engagement that may be different than the exchanges you're used to trading on. Securing telco, bringing market data across the oceans, or just dealing with legal and currency challenges. And if you go to the next slide, we have focused on these challenges specifically to make sure that we have good solutions and work with our customers to make access to these Asian markets as easy as possible. So, key among them is we have local personnel in all of the markets, major markets in which we operate, and that certainly includes Singapore. And that doesn't somebody local, if there's a language barrier, having somebody that speaks that language and knows the customs and culture of the area really facilitates quicker communication. And if you have an issue, we can talk to the exchange in their language and their time zone to get it addressed. Extends to the vendors we work with and stuff like that. In terms of time to market, we're live today. We can stand up a server as quickly as you can provide it, or we can source it on your behalf and install it in racks that are ready to go with market data that's already on the network and ready to turn up. So we're really nimble and agile, and we can turn you up in as few as a few days if we have the hardware in hand. I mentioned that we have the extranets extended throughout Asia Pacific and in Singapore, and that allows us to kind of present the relationships we've built. We have over 1,000 relationships with various brokers, buy-side firms, and vendors, and that's especially true in Asia. And we can facilitate those introductions. If you need a local vendor or you need a broker to help you access SGX, we can make that introduction, and they're likely already on our network, making the connectivity piece really quick and easy. We can procure hardware locally to your specifications, or if you want a standard server spec, we can provide that. But beyond that, we have established relationships with all of the vendors in region, whether it's telco or smart hands or hardware vendors. So again, we have those relationships established in that time zone, in that language, and can be very agile in terms of sourcing new services, new pieces of hardware, and things like that. I think the biggest thing we bring to bear in terms of making some of these challenges easier is just the decades of exchange expertise we have on staff. We have a lot of people who have worked in the market data space and the exchange connectivity space for, sad to say, decades. I'm going to age some of us on this call. But with that comes, a lot of hard-won expertise, and we can help you. The SGX has made it about as easy as it gets to access and trade on an exchange, but we can still help you and handhold you through just kind of the onboarding and understand what data feeds are available and what the trade-offs are amongst them, and kind of facilitate that onboarding. And we touched on this earlier. I think one of the biggest selling points we have in that region is just our low latency backbone, spanning Asia Pacific, but able to bring all that away market data into SGX. Data volumes are big and they're constantly increasing. If you're going to build your own market data network, those are big, expensive circuits you have to have in place. Working through a data vendor like TNS, we already have that data on our network, and we can, mutualize the cost and make it much cheaper than if you did it yourself. And finally, by working with a single vendor, it's going to be governed under a single agreement, billed in your choice of currency, making all those business and legal hurdles that much easier to deal with. So, I think that's it in terms of what we have prepared. In summary, SGX, you heard, what they're doing in region, and it continues to be just a critically important exchange for the global economy, but particularly for firms looking to access, and get pan-Asian exposure. And as we've mentioned, in conjunction with SGX, we've made it tried to make it as easy as possible for North American and European firms to access the exchange and deploy the trading strategies and take advantage of opportunities in market. We have our full suite of services on the TNS side. We have our full suite deployed, as we mentioned, including that layer 1 service, minimizing your added latency and really making it as performant and easy to access the exchange as possible. So unless anybody has anything to add, I think that is the end of our prepared remarks, and I think we'll open it up to questions.
Thanks, everyone. If anyone has any questions, please go ahead and drop them into the question box, please. All right, the first question we have is, what are the benefits of multi-asset class exchange to manage Asian risks?
Greg, you're on mute. Oh, Craig's stuck on mute. Paul, you got this one?
Here we go.
Hey, sorry, I apologize that I was muted. I think which Paul would like to do with me more often. But first off, I think that one thing Jeff mentioned in terms of the language barrier, obviously with Singapore, that's a factor. But there are 3 other things that are worth noting. Number 1, cross-margining capabilities across all of our products, which could provide significant cost savings. Speaking of cost savings, having your technology all on one and being able to do everything will eliminate some of that as well. And then finally, the majority of our contracts are USD denominated, which hedges some of your currency risk, whereas in many respects you'd have to have that on each exchange. So this is having that all on one is I definitely think a positive.
Thanks, Craig.
Thank you.
Next question I have is deploying layer 1 expensive? I think that one's for TNS.
Yeah, I can take that. So I did touch on a little bit on the slide, but there's a couple of factors that go into play. The short answer is it's competitive, right? So when you look at us compared to a traditional type deployment, pricing is right around that same ballpark. So and the reasons why we're able to do that is because of the fact that we got a flat network, so we don't have a lot of hops. Not a lot of hops means not a lot of hardware. Not a lot of hardware means not as much support, behind it. So operationally, we've got this deployed, in a global fashion. It's very standardized, from a deployment perspective as well as an operational perspective, and it allows us to keep that cost down. So, in a nutshell, when you're looking at this, solution or this offering, you're going to expect to see it, to be something that you would normally pay for in a traditional, like layer 3 type environment.
Thanks, Scott.
Yep.
All right. What is the exchange order round trip latency within SGX colocation?
Yeah, I can take that. So within SGX Colo, it's under 300 microseconds at the 95th percentile.
Thanks, Paul. And it looks like we have one more question. So if anyone has any other questions, please drop them in now. Otherwise, this will be the last one. What kind of market data does TNS deliver from SGX?
So as a colocation provider in the SGX colocation suite, we can provide access to every feed that SGX makes available, whether that's the SMDF and DMDF feeds or the Titan DT itch feed within colocation. Like I mentioned, we're in tier 1 and we have 10 gig handoffs to the exchange. So it's, again, the theme is we're maximizing uptime and minimizing latency within the data center. But as we touched on earlier, we also have the ability to bring in that away market data, raw market data from more than 60 exchanges around the world throughout APAC, but also in the US and Europe across that backbone that we extended SGX.
Great. Thank you, everyone, so much. I think this concludes the webinar. Have a great day.
Thanks, everyone.
All right. Thank you.